I want to talk about deflation again and deflationary collapse, and then socialism after that. Well, I have a couple of videos in the past about deflation, and but the ideas about deflationary collapse they are not as much in my videos as ideas about deflation. Well, I want to go over some scenarios, some events that are happening, and they are like that they conform to that theory. I was listening to Peter Schiff, and he was saying that when the central banks or the Fed they comes in and wants to prop up the market, and that's all they care about. They come in and they buy a few stocks of major companies like Apple or IBM or whatever. That they deem those stocks to be good, valuable American companies, and because the valuation of these stocks pretty much carries the market. For example, they'll come in and buy Boeing, even though the company is a miserable failure and their planes don't fly, but because it's Boeing and the Americans think that the world should fly these planes, then they'll come in and prop up this stock or this company or a couple of other companies. And so we can see that the market, the valuation of the whole market is constantly breaking new highs. But then Peter Schiff was saying that that's not true for many other stocks. The Dow Jones or Russell is composed of many companies, and they are not such favored babies as Apple or Boeing. And many of these companies, they are not doing very well in their stocks or performance or evaluation. They're losing money. Their stock is collapsing. Well, I have been hearing about Deutsche Bank and few other stocks that they have lost value, like Uber, Lyft, and Mr. Schiff, he discusses this stuff or studies the market more in depth, but these scenarios, these collapses in stock prices, which doesn't reflect in the general market, is actually a deflationary collapse, which is like in reality in the real market where some companies are not favored. They have to really compete and show innovative products or have a good performance or return good money on investments. Those companies are not doing very well, and there is many of them. Also, another form of collapse is that the companies that have published bonds, junk bonds, government bonds, they are not doing very well. They don't have resale value, which means that excuse me, even though the central bank comes in and buys a lot of these bonds, when the company wants to get fresh money or do something else or develop a product and they want to sell the bonds on demand, but there is nobody buying. Uh, but the bonds have very good valuation in the eyes of the Fed, but that's a phony valuation. It's not a real world valuation. There isn't somebody in Saudi Arabia that could call and sell this junk bond that pays 5%, which is a good return, because they don't have customers. They don't have real customers that want these bonds. And this is a collapse which the investors are either not willing to acknowledge, or which has happened, but they kind of brush it under the rug. Well, in the Kaiser report, they were saying that the banks, they have this walk of shame, that when they need money for overnight lending or overnight bookkeeping to show that they are a liquid bank, they have to do this walk of shame to go to the Fed's window and borrow money just for overnight. And the overnight rates have shot up to over 10%. So this shows a collapse in a bond or monies that the bonds that issued for 1 day or 1 week, and the collapse is not showing up in the books of the banks, or because it's really short term, and they kind of hide it. But well, then if this spreads, if many companies they are forced to sell their bonds that are on their books to get money to run the day-to-day operation, well, Mr. Kaiser was saying that the Fed cannot put out the fires when they start. You cannot put out the forest fire by a squirt gun. Well, if many companies they start looking to get out to get the valuation or the money for their bonds, then these collapses, which are happening right at the overnight lending market or repo market, it will spread. It's like a wildfire that goes from many places. Actually, it's more like contagion of very rapid moving affliction. Well, there was a book, fictional book by Captain, what was the name? By Stephen King, and in this book, there is a flu shows up that they call it Captain Flu. It's extremely deadly flu, and it spreads like wildfire. Even if you touch somebody, or if you have the slightest contact, even the air can get in. It's like Ebola. Then the contagion spreads over there. So when this fire in the financial markets, or this deflationary collapse, and I'll explain what I mean by the word deflationary collapse. When it spreads like Captain Flu, then that's going to be like a carnage. But the word deflationary collapse, which means like the same concept I was just talking about, when the bonds that are that yield like 1.5%, 2% or 3%, they collapse in value. The many companies and many investors, they want to get out. They want to sell these bonds at any price. Then that's a collapse in the price of the bond. But the reverse of it is the interest rate, which is part of the price of the bond. But when there is a deflationary collapse, there is a deflation in the price of the bonds or the stock price, like it's happening under the rug in many parts of the Russell 2000 or Dow Jones, other parts of the index, then that's the real deflationary collapse. Well, this is happening similar fashion to in this real estate market. Some properties that are very well known or valuable, building that Irvine building company owns, well, their prices just keep going up and up because they have friends that will support this price. They have the Fed. But other buildings, other other establishments, their price of the building or the real estate is collapsing. It's like you have a whole bunch of very fat pigs, and you are the farmer, and you don't have any more feed to give them, and they're already very fat. So what you usually do is every other day take a couple of them behind the shed and slaughter them, and sell one to buy the feed for the other ones, and then the one that's slaughtered, well, that's your profit. I mean, this is a kind of like a very crude estimate of what's happening in the financial market, but there is this spot, the slaughter, and then they're moving on, and so on. Well, because the government or the Fed have been issuing new currency and giving it to their friends, like Cantillon effect, in the real economy, there isn't any money coming in. The velocity of money has collapsed. Many companies, retail stores, they have closed, and these companies that are now very favored, they have to sell to the consumers, which are also bankrupt too. So the prices that they can charge and generate any business, those prices have been suffering deflationary collapse, which is really like a long-term and ongoing deflation. And that's not even the worst part of this analysis. There is deflation that's induced because of very rapid technological advancement. Deflation that's induced because there are many countries, there are many producers producing the same thing. There is an ongoing long-term deflationary collapse in the price of crude oil, because many countries, they have gotten loans and bonds, or they have issued it, and they have invested in the oil production and digging for new wells. So the price used to be 100, then became 90 and 50, and even went to 40 and was kind of testing 30. But then it came up to 50 something, 56. And even if huge disasters happen, like the Houthis attacked, one of the biggest refineries in the world, well, the price shot up like $5-6, and then it went right back to what it was, 50, and going on a very, very downward trajectory on a very steady and slow slope. Okay, that's just one commodity. And another commodity that many economists, they always look at this one, is Dr. Copper. Well, copper used to be used a lot in transmission of signals and electricity, but when there is all this Wi-Fi and all this wireless transmission, there is even wireless transmission of electricity. Some cell phones, there is a station. You can just put the cell phone and holder right next to the power generator for the cell phone, and it will charge up by induction. You are not using any kind of wire or any kind of contact, anything. So the price of copper has suffered deflation, and that's due to technological innovation and advancement. I had a video about technologically induced deflation. Then that's not the end of deflation. There is many countries they have become industrialized, and they have huge populations, well, China and India come to mind. These are massive population. India, I think, could be the next powerhouse of manufacturing, or is the next powerhouse. You can make anything at peanuts. The price is almost nothing. They are making the cheapest cars in India, the cheapest bikes. I don't know. I think they make a lot of pharmaceuticals too. So deflation is a reality, and also deflationary collapse in all the stupid bonds and currencies all these banks have produced. Then what will become also very difficult in the future that we are going towards, and this is really, we are walking to zero marginal cost society or socialism, is that when a company invests in new factories and new production, the profit margin is extremely low. You have to produce